Welcome back to Everything Money. Thanks again for joining us, our patrons and supporters all over the world. As always, you know I love you. We welcome you back in. Today we are talking about Oracle, a software company. They do database technology, resource planning. They employ 430,000 customers, over 175 countries, Paul. It's incredible. And we're going to look at the 8 pillars, what's behind this company, the money they're making, the income, the shares, all of this using our beautiful Everything Money software, which we'll show you right now. And I welcome in Paul and Mo. We will head over to Mo, the captain of the Bid and Ask Nation, for trading, momentum trading. But first, Paul, give us your thoughts on Oracle and this company.
So Oracle is a company that look at the stock price over the last 20 years. It took how long to even get back to...
Wow, look at that.
It took to break new highs, it took 17 years to break previous highs. That's what happened. I think it got down to $6 or $7 a share in 2000.
What does this mean for a normal person if you're looking at this graph?
So guys, look at the reason I bring this up is there's a lot of hype today. This company took 18 years to get back to its normal price. Look where it was in revenue back in 2000. In 2000, it did $10 billion in revenue. In 2018, when it finally got back to its normal price, it did $40 billion in revenue. So its revenue went up 4 times, and its stock was still even. This is the point I'm trying to make about you can overpay for growth. If I told you in 2000, Oracle's revenue is going to go up 4 more times, you said, oh, there's no chance the stock is lower. You're right. The stock was even after 18 years. It took 18 years and 4 times revenue growth for the stock to be selling for to get a new all-time high.
Yeah.
This happens all the time. It'll probably happen with many companies today that we look at that in the future we'll be saying, oh, it's dead. I think it's possible that Amazon is one of those companies where all of a sudden we're looking at the stock price 10, 15 years from now and it's the same or lower than it is today. Now, let's go look at it. $250 billion company, $40 billion in revenue, $13 billion in profit with 18 PE and a 34% profit margin, both check marks.
Double check marks. I love it.
They pay a 1.2% dividend, $3 billion paid out. Now, guys, the biggest misnomer is company pays a dividend, they can afford it. Nope, we look at the free cash flow. They made $13.75 billion in free cash flow last year. They paid out 3 in dividends. They can easily afford that dividend. Pretty solid return on assets, return on invested capital. It means they make good money off their assets and their debt. That's pretty solid. It's not great. It's not amazing. It's not like Apple, but it's still pretty solid.
How about pillar number 3 is revenue over the past 5 years, Paul?
So revenue growth, 37.8 to 40. Check mark there.
Check, please.
Okay. Profit growth is pillar number, what is it? Go ahead.
9.45 to 13.75.
Nice.
Check mark there. Chickadee, 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 check.
Pillar number 5 is shares outstanding.
Look at this, Uncle Seth.
Oh, boy.
4.13 down to 2.85. Wow. So they're giving their investors more ownership of the company by buying back their shares. They're taking that extra cash flow, and instead of putting it in other things that they can't grow, they sit there and say, let's give our shareholders who've been with us more ownership of our company. Right? This is a very, very unknown thing. And this is something that you're going to learn from our software. And you can learn, check this out, guys. This is our software. If you like it, come check it out. For 84 cents a day. It used to be $8 a month. It's on its way to $49 a month. But right now, it's 84 cents a day. If you buy it, you get locked in. You get mobile app, 8 pillars, 30 years of financial data, all these things. The biggest thing of which is our Discord community, over 4,500 people to talk to in a very organized and succinct way. And you get all of these. And look at the other competitors, $199 a month, $199 a month, $35 a month, and you don't get even close to what we give you.
I hope you're asking yourself, how would you make investing decisions without having access to this information? And we can get it to you very quickly and easily. So we have one of the best patrons in the world already, Paul. It's been incredible, and we're going to keep building on it. So keep going with Oracle. We looked at shares outstanding. How about pillar number 6, which is current assets over current liabilities?
$55 billion versus $24 billion. Check mark there.
Yes, we're doing good.
Cash flow.
Free cash flow growth.
So one of the things you get in our software is I add this line to the cash flow statement because this does not exist on normal cash flow statements. $12 billion to 13.75. Chickadee check with an average of 12.8, which is a very consistent free cash flow number. 12.8 times 20 is $256 billion, right? Yep, $256 billion. What's the current market cap? 250?
How did you get 250? You really did just get 256 off the top of your head. I mean,
well, not off the top of my head. I just did the math. 128 doubled. 120 and 120 is 240.
Sorry about that.
16s. All right, so it's saying according to that multiple of 20 that it's selling for a reasonable price.
Yeah.
However, we pay 20 if there's good growth here. There's not a ton of growth here in the free cash flow. Mm-hmm. So even though the pillar is for 20 times, I would argue this company should be a lot lower than 20 times because the growth potential is not there. So look at our 8 pillars tab. It's an 8-pillar stock. All checks along the way.
Wow.
Right? 19.8 times free cash flow, 18.44. Now, what we're going to do after Mo shows you the chart, we have a stock analyzer tool. You put in your assumptions for growth and PE and margin, and it'll tell you what you should pay for the stock today based on the returns you also assume you want to make. We're going to do that right after Mo's done.
Mo, are people trading this in the Bid-Ask Nation?
So Oracle's, the first part, I always say the gaps often fill. This was probably earnings, gap down, gap filled right back up. But anyway, so it moved through the sweet spot. It did a little reversal, and it's just been going sideways. And you can kind of see that it can't break out over this previous all-time high. Now, let me show you why. I actually pulled up the daily chart, and if you just look at this volume, look how it, just starting back here in July, it's just completely decelerated. So for whatever reason, there's not interest right now because it's probably at all-time highs. Something needs to happen. Volume needs to be driven into the stock. As soon as these volume bars get going again, back to around this kind of volume, I think eventually it will just start going out. I mean, it's tech. It's going to just keep rolling with the rest of the tech market, driving the market up. But this is a good example of why you need volume. As soon as volume starts to decelerate, your stock runs out of gas. Volume is gas to a car. If there's no volume, stock price ain't going anywhere. If there's no gas, car's not going anywhere.
If this resonates with you, you can join the Bid-Ask Nation. It's a Patreon tier dedicated to trading. You get access to Mo on a daily basis. He makes videos. He announces his trades. He guides you towards trades and sells, and you can make some money in there. Paul, this is a stock analyzer tool. You also get this with access to our software via Patreon or everythingmoney.com. And this really guides us, Paul. Once we know this is an 8-pillar stock, what do we pay? The stock price today is $88. Is this a good deal or a bad deal? I don't want to just pray I buy at 88 and hope it goes up. We'll show you how it might.
Now, you can select your years of analysis between 1 and 20. I always pick 7, especially for a large established company. Because I look at it saying this company will be around for a long time is my guess. Now, look at this, guys. It tells you your 1, 5, and 10-year numbers. Oracle's not growing a ton. 1% a year over the last 10 years, and I'm sure they've had acquisitions along the way. So I'm assuming 0% growth, 1.5, and 3. They are buying back a ton of shares. I'm probably being a little too conservative on that end. I should probably put higher numbers here, but I don't know what their plan is. If you have more information on what their plan is, input the right numbers in there. Profit margin, the profit margin last year was really high, so I'm not going to assume that's going to go on forever. I put in numbers. PE, and my desired return, 15 out of 10. Guys, what I try to buy in is somewhere in between these two when it shows the numbers below. I look between the low and middle, and that's where I want to buy. So I hit the analyze button, and it's telling me the stock currently is overpriced, probably because of the growth rate. So I think it's probably worth somewhere between 50 and 70 bucks a share. So it's not far off. It all depends on your assumptions. I look at that going, okay, somewhere in here is probably about right for a company that's established and buying back shares. So let's go change the share buyback numbers to something more reasonable. -4, -5, -6, analyze. Yeah, it's still $50 to $70 a share. I think somewhere in that range is where this company's worth. You'll probably make a pretty decent return on your money. It's a little overpriced now, which is not surprising, but a company with this little growth should not be selling for a premium on PE and free cash flow because you're not getting your growth to leverage that money to generate more free cash flow. So you have to pay a good price for it.
So just to recap, Paul, like this stock was $57 last September, still in the midst of COVID. When you say 7, is this stock analyst behind you means if I buy today, I can expect this amount of return?
If you buy today between 58 and 76 and your assumptions that are here in the middle, great question, Seth, and these assumptions turn out to be true, you'll make about 12.5% in return on your money.
That would be beating the market and be pretty darn good.
Absolutely. And I know a lot of value investors whose goal is 12%. I always put 15% in for my low number just to see where we stand. But that's what this means. It means, by the way, that if you assume these high things and all do this correctly, you can buy it today for 88 and it's worth between 94. So you'll probably make a little bit better than 10% return. That's all this is math. Every investment is the present value of all future cash flow. That's it. Whether it's yearly or one-time sale, it's every investment is the present value of all future cash flow. That's it. And this is just estimating the earnings and cash flow and saying, okay, what do you want to make? Let's do the math. The thing is, the future is unknown. We're making assumptions. What I encourage people to do is make conservative assumptions and buy a company that fits those conservative assumptions or is selling for lower than that.
This is not a wild idea. We talk about this book that we've been in love with, Richer, Wiser, Happier. It analyzes the top investors in the past decade, and they all have the same motif and mindset, Paul. It's maintaining your thought process about what you could lose. analyzing the downside risk, and not just thinking about what you can make, right? It's just like being a little more conservative than perhaps we've been trained to be in today's markets, buying.
Exactly. But the thing, you spend too much time working for your money, and then you go out there and spend hours and hours and hours researching the one car you're going to buy so you can save $400 in that car and brag to all your friends about how you took the dealership to the cleaners because you got a car for $400 less. And then you go out and spend $2,000, $3,000, $4,000 buying a stock that you did zero research on, that you have no understanding of what it is, and the numbers are terrible.
That's why we're here. We can help you. Join our Patreon. You can join our team. And we can guide you through some of these trades. And you'll have the software and the data right in front of you to make better investing decisions. That's our take on Oracle. We appreciate it. Fondle a thumbs up on the way out. We'll see you in the next video, and thanks for watching.